Hello friends. In this video, we will look at one of the key steps of stock market research, which is to understand how to go over a company's corporate reports. If you have an accounting background, you may already have some knowledge of what an annual or quarterly report is, but most beginners in the investment world and even many experienced traders don't have sufficient knowledge about these key corporate reports and what to look for in these reports while analyzing a stock. So I hope you will find this video very helpful. Let's get started. The annual report is a document that details a company's activities over the past year. As we saw in a previous video, it is important to understand that there is a business behind each stock traded in the stock market. And if we focus on this business aspect, instead of just buying or selling a stock based on random price movements, we will do extremely well as a long-term investor. The annual report is probably the most important tool we can use to understand the business behind the company's stock and make informed decisions by assessing the business potential as well as any risk the company may be exposed to. In the United States and most developed countries, every company traded on the stock market is obligated to file the annual report with the regulatory authorities in a specific format. This is to help various parties like investors, financial analysts, creditors, and potential future investors to get periodic information about the company's performance. In addition to the format that is legally required, most of the well-known companies also publish on their website a more user-friendly version of the annual report that is more illustrative and easier to understand. In terms of the content, an annual report would generally contain the following. 1. A letter or opening remarks from the CEO. Sometimes this is not part of the annual report and is provided as a separate document. 2. A summary of the business operations the company is involved in and a high-level narrative of the year's activities and performance. Future forecasts are also provided based on management's assessment of the business operations. A listing of the existing or potential risks are also provided for the reader's benefit. 3. A note about ongoing or potential legal proceedings is also included in the annual report. 4. The management also provides an update about the financial condition of the company. And 5. The company's financial statements are included in the annual report. These typically include the income statement that provides information about the income, expenses, and profit and losses made by the company over the last year, the balance sheet that lists the company's assets and liabilities, and a cash flow statement that details the various changes in the cash position during the year. Now, we will go over the quarterly report, which is quite similar to the annual report from a regulatory perspective, but obviously with a quarterly focus. It is issued by the company 3 times every year, and the 4th quarter is rolled up into the annual report. The financial statements included in the quarterly reports are usually unaudited, whereas the financials in the annual report are certified by an independent auditor. Most companies also schedule an earnings conference call every quarter where they go over the major developments of the quarter and answer questions from investment analysts. And once a year, the company organizes the annual general meeting, in short the AGM, which is open to all shareholders to connect with the management team and vote on important matters like appointing the board of directors, dividend policies, selection of auditors, etc. In case the company needs to address any important issues that require the shareholders' vote between 2 AGMs, it may schedule an extraordinary general meeting for this purpose. Now that we have discussed what an annual and quarterly report means, let's focus on how to use them effectively as part of researching a stock. Usually, investors conduct research only before buying a stock, but it's equally important to keep in touch with the business behind stocks you already own, and the best way to do this is obviously going through the corporate reports. The first thing to focus on when reviewing corporate reports is to clearly understand the business the company is engaged in. If you don't even understand what the company is doing, it is extremely likely that you will not be able to make informed decisions about when to buy or sell the stock. Once you're satisfied that you understand what the company's core business is, you should also try to substantiate that knowledge by learning a bit more about the industry in general so that you can evaluate the company against some of its peers. It is also very important to stick to industries you have a basic understanding in and try to continue expanding your knowledge little by little every day. This is what famous investors like Warren Buffett and Charlie Munger refer to as a circle of competence. As part of understanding the company, you should also look closely into the management team. By reviewing their track record using some independent research sources, you can evaluate if it is prudent to trust your hard-earned money with them by investing in the company. The next topic to focus on in the corporate reports are the section on risks. Most of the statements about the various risks are very generic, like the company could be impacted by an economic slowdown. So it is important to focus your attention more on specific risks that have a higher potential of occurring. Some of the risks a company may be facing are competition from peers, geographical risks, especially global in nature, political risks, etc. This risk assessment exercise is very important. Having said that, it does not mean you shouldn't invest in companies with potential risks. What you need to do though is attach a satisfactory risk premium when you estimate the price at which you're willing to buy the stock. The final section that you should be reviewing closely is the financial statements. By this time, you should have made up your mind if you are even willing to consider investing in the company or not. In other words, reviewing the financials should ideally be only done for businesses you understand. The main aim of reviewing financial statements is to come up with a fair value of the stock, which will help you decide when and at what price you should be buying the stock. This step is very extensive and would require several videos on their own. So I will continue to expand on this topic in future videos, where at a high level, when reading through financial statements, you should focus on the year-over-year trends on key items like revenue, expenses, earnings, inventory levels, debt, stockholders' equity, dividends, etc. If possible, try to compile and review several years of historical data and make conservative estimations of future projections, keeping in mind the condition of the overall industry and economy. With this, we come to the end of this video, and I hope it really helped you. And as a friendly disclaimer, I also want to mention that I am not a registered investment professional, and this video is only intended for providing you my insights and for your entertainment. So please consult your registered investment advisor before investing any money. Thank you for watching the video. If you enjoyed it, please click on the like button and subscribe to this channel. And please leave your comments and any questions below, and I look forward to talking to you in the next video.